The information provided by Trading Forex Price Action to you does not constitute personal financial advice. The information provided is of a general nature only and does not take into account your individual objectives, financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice.
Hey guys, there's a weekly forecast for October 31st through November 4th of 2022. Okay, let's start off with the dollar Swiss pair.
Okay, this is a monthly chart. We'll start off with an overview. So although there was a possibility of a long-term short trend just beginning to form due to these consecutive rejection candles right here on this monthly chart, however, this month price reached that pivot high, eliminating the possibility of that long-term short trend. And so in the long term, I am neutral biased. And more of on the daily chart, there was a long trade that formed right here. And just recently, there was a daily short trade that formed right here. And at the current moment, I'm waiting for the lower time frame confirmations to confirm this daily bias. And so in the short term, I'm also neutral biased. Okay, let's talk entries. Okay, this is a weekly chart. Let me run you by what's been happening on this pair for the last couple of months. So back in May, there was a strong short trade that formed right here. And then about a month and a half later, there was a week long trade that formed right here. And so the weekly bias was short, or in other words, price was likely to reach this pivot low before reaching this pivot high. And that main target was hit right here. And then another 2 months later, there was a strong long trade that formed right here. And so the bias became long, or in other words, price is likely to reach this pivot high right here before reaching this pivot low. And that main target was hit right here. And at this moment in time, there's actually a daily bias that formed with a daily short trade forming right here. And the last daily long trade that formed right here. So let me go ahead and show you that daily setup. Let's go over to the daily chart. Okay, so on this daily chart, the last daily long trade that formed was right here. Then about a week and a half later, there was a daily short trade that formed right here. And this long trade seemed to be stronger than this short trade. So the bias was long on this daily bias. Or in other words, price was likely to reach this pivot high before reaching this pivot low. And that main target was hit right here. And then moreover, we had another weak daily short trade that formed right here. And so the bias remained long, or in other words, price was likely to reach this pivot high before reaching this pivot low. And that main target was hit right here. And now, just about a week ago, there was a new daily short trade that formed right here. Okay, so the daily bias is going to depend on the strength differential between this new daily short trade and the last daily long trade right here. So let's go ahead and see what's providing short strength for this short trade, as well as long strength for this long trade. Let's go over to the monthly chart. Okay, so on this monthly chart, that daily short trade formed in this area, and that last daily long trade formed in this area right here. Now, in terms of the short strength for that daily short trade, first of all, we have this small gap right here, which is providing short strength. However, that short trade is running into this miniature gap right here, which is actually providing long strength for that daily short trade. Okay, so you want to subtract the long strength from this mini gap from the short strength of this small gap up here. Okay, so like in this case, where there's counter strength created from gaps, you want to take the gap's width that's providing counter strength from the gap's width that's providing short strength. So in other words, we want to take the width of this gap right here and subtract it from this gap right here, which leaves us with about half the strength of this upper gap right here, right? Okay, so what's providing short strength for that daily short trade is this upper gap right here minus the gap width of this lower gap right here. Okay. All right, so let me show you the levels for these gaps. Okay, so this upper gap, the top level is at 1.00186 and the lower level is at 1.00047. Okay, and the upper level for this lower gap is at 0.99822. And the lower end for it is 0.99735. Okay, and what's providing long strength for that daily long trade that formed in this area is only this miniature gap right here. Let me show you the levels for that. Okay, so the upper level is at 0.9532 and the lower level is right under it. It's at 0.9527. Okay, so that's a very small gap. Okay, so going strictly from this monthly chart, strength differential, there seems to be more short strength on that daily short trade than the long strength on this daily long trade. Okay, but like always, the lower time frame confirmations have the ultimate say in terms of these biases. So let's go ahead and see what's happening there. Let's go over to the 15-minute chart. Okay, so on this 15-minute chart, that daily short trade formed in these areas right here. And then soon after, we had confirmation of 15-minute strong short strength. That's from this trend line, from this pivot to this pivot right here. We got a breakout, an immediate break back in, making normal long strength. However, a couple hours later, price came right back down to that pivot low right here to override that normal long strength and create strong short strength. Okay, so as of now, the lower time frame confirmations are confirming that daily bias is short. Okay, so let me just zoom out really quick. Okay, so there was strong short strength confirmed right at this level right here, right? And then after that, for this entire week, we did not have any further confirmations, whether long or short. So typically, if price pulls back close to that daily stop loss level right here, I would be willing to take a short entry. However, I am not. Now, that's for two reasons. Now, number one is because it's the month of October and November, which is typically a little bit rangy. So what could possibly happen is that although lower confirmation is confirming strong short strength at the moment, it's very possible that price just ranges about and confirms both long and short strength over and over. Okay, so I'm not going to take a pullback entry simply based on this 15-minute confirmation due to seasonality issues. Now, number two is because since we have low liquidity during these months, for a daily bias, I much rather have at least a 1-hour time frame confirmation to confirm that daily bias. And using a 1-hour confirmation is going to make it less likely that these rangy markets will confirm lower time frame confirmations in both directions, simply because the confirmations will be on a higher time frame. So let me go ahead and show you a possible level I'm looking at for that 1-hour confirmation. Let's go over to the 1-hour chart. Okay, so on this 1-hour chart, try to draw on this trend line from this pivot to this pivot right here. Now, price will come down to this trend line, break it out, and immediately break back in to create normal long strength. However, price could come right back down to that pivot low to create strong short strength. In that case, I'll be willing to take a short entry if I could get a nice pullback to that daily bias stop loss level at this level right here. Okay, so I'll be looking for about a 100 pip stop loss. So that'll be around the 1.0048 levels, roughly around these areas right here. Okay, but for the time being, we still don't have any lower confirmation on this 1-hour chart. So I'll keep you guys updated with this one. Okay, so let's go on to the euro dollar. Okay, and if you're having trouble understanding what I'm talking about in terms of weekly biases and lower time frame confirmations, please check out my forecast manual, which is an instruction book for these forecasts that you can refer to when you're having trouble understanding what I'm talking about. Okay, and you can find that in the detailed section of this video. Okay, this is a weekly chart. Let's start off with an overview of the current setup I'm looking at. So the last weekly short trade that formed was right here. And the last weekly long trade that formed was right here. Now, initially in this area right here, we have 4-hour confirmation of strong short strength, confirming this weekly bias to be short. Or in other words, price is likely to reach this pivot low before reaching this pivot high. And so I was mentioning, if we do get a pullback all the way up to these levels, close to that main stop loss level right here, I'll be willing to take a short entry. However, this week, like I posted on the communities tab, there was confirmation of strong long strength that formed as price pulled back to the entry level. And so I was mentioning I will not be taking this short entry. Okay, so at this current moment, since there was strong 4-hour long strength confirmed at this area right here, this weekly bias is now confirmed to be long. Or in other words, price is likely to reach this pivot high before reaching this pivot low. Okay, so first of all, let me go ahead and show you that confirmation of strong long strength that formed this week. Let's go over to the 4-hour chart. Okay, so on this 4-hour chart on this trend line from this pivot to this pivot right here. Now that strong long strength will confirm at this level right here. So let's go ahead and zoom in. Okay, so again, that trend line runs right through this level right here. And as you can see, we got a breakout, an immediate break back in right here, confirming normal short strength. However, price came right up to that pivot high to confirm strong long strength. Okay, so as price pulled back, I did not take this short entry. Okay, one more thing I want to show you. As you can see right here, the breakback in candle right here has a gap on it. So it gapped down and then broke back into this trend line right here, right? Now you may be wondering that that's not an immediate breakback in, or in other words, where the close of the breakout candle and the open of the breakback in candle is at the same level. Now in the case where the breakback ins candle is gapping in the direction of the strength it's making, in this case which is down, it's okay to have a gap. And although it's not an immediate breakback in, since the gap is in the direction of its strength, it qualifies as lower confirmation. Okay, so just keep that in mind. So let me go ahead and show you how I plan to trade this setup. Let me go ahead and zoom out. Okay, so the weekly bias parameters is between this pivot low and this pivot high right here. And at the current moment, that weekly bias is confirmed to be long. Or in other words, price is likely to reach this pivot high before reaching this pivot low. But like I mentioned earlier, in the month of August and November, it's often very illiquid. So there is the possibility of ranging markets. And so as long as the lower time frame confirmations confirm a bias and I get enough of a pullback to minimize my risk, I will be taking both long and short positions. So in other words, since the lower confirmation is confirming this bias to be long, all things remaining equal, if you get a pullback close to the stop loss level right here, I'll be willing to take a long entry with the stop loss level right here and this main target right here. And then moreover, due to ranging markets, if we have confirmation of strong short strength, I'll be willing to take the opposite positions, which is short also. Okay, so again, at this moment in time, if I do get a pullback right back down to these 96.34 levels right here, giving me about 100 pip stop loss, I will be willing to take a long entry. But again, that's assuming there's no further lower confirmations that override the current long confirmation that formed in this level right here. Okay, so I'll keep you guys updated with this one also.
Okay, so just a quick heads up. Like I showed you on the dollar Swiss pair, there was actually a daily bias and moreover a weekly bias that formed simultaneously. Now when this happens, you want to trade the higher time frames bias. Now this is because a basic price action rule states that the higher time frames innately produce more strength than the lower time frames. So for example, if a daily bias is short while a weekly bias is long, well, you as a trader want to be long biased. Okay, and like I mentioned earlier, the markets tend to range during this season. So you really want to be aware of the lower time frame confirmations confirming biases in both directions just over and over. And the way to overcome this problem is to use the relatively higher time frames for lower confirmations. Okay? Alright, so I hope you guys have a great week, guys, and thanks for watching. Okay, bye!